Good morning, everybody. This is the live market open. Hi, hope everybody's doing well. It's March 1st. It's a new month. I'm Yochai Lam of Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. As each time, we'll cover recent developments in markets and discuss charts and levels, the upcoming events this week, which is quite a busy one. Our currency of the week is the world's most popular currency pair, euro-dollar. Then we'll discuss the week ahead with the NFP and the ECB and wrap up the show as usual. And most importantly, your questions are more than welcome. If by any chance you cannot see the chat box alongside the screen, please go to the address here, tlk.io/fxstreet-forex-live-video. So what's going on in markets? Well, the big event of the night, of the week, was Donald Trump's speech to Congress, okay? But he made the speech to the joint session of Congress, his first sort of State of the Union speech, and expectations were quite high, to say the least, because he planned to lay out his vision, including economic plans. Now, this was supposed to be the main event. Towards this main event, we had some leaks, not leaks, reports, and there were some disappointments. But eventually, the dollar did rise. Why? That's because of Dudley, not the Donald, okay? So let me explain. Towards the event, we had talk about Trump wanting to increase defense spending, okay? Which is not what markets want. Markets want more infrastructure spending. And as a priority, he had Obamacare, changing, repealing, replacing the healthcare programs, and as a priority and pushing back taxes, tax cuts to the future. Again, not a priority that markets wanted. The dollar was under pressure towards this event. All right. In addition, in order to pay for those defense increases, the U.S. defense budget is around $600 billion US dollars, and he wanted to add about 9%, $54 billion. Okay, in order to pay for this, he thought of cutting in other places. Okay, these details came out before the speech. They depressed the dollar, but when he spoke, actually the dollar went up. It's not related to Donald Trump. It's related to the Federal Reserve. More specifically, Bill Dudley, the president of the New York Fed, came out with a hawkish statement. Usually it's very dovish. And now the chances for rate hike in March have significantly increased. So today is March 1st. The Fed meets in exactly 2 weeks on March 15th. Up to quite recently, the chances were quite low for a rate hike, but this week they've increased, okay? So there are various measures in bond markets to measure, well, the chances, the odds for a rate hike. And what we've seen is that already earlier in the week, Bloomberg's WIRP function went up. And now with Dudley, it shot up. And also, even more importantly, the reactions to Dudley's speech and Williams' speech showed that triggered reactions from analysts, from Goldman Sachs, from others, okay? So all in all, this is positive news for the dollar. And let's talk a bit, put here some quick comments on what they actually said. So, yeah. So these are the comments, the big comments from Dudley. Remember, Dudley's number 3 at the Federal Reserve, and he said there's a compelling case for raising rates. This is as hawkish as Dudley gets. Usually he's dovish, usually he's very, very cautious, prefers waiting, prefers, if in doubt, stay out, sort of his motto, if you wish. And when he was asked about what is fairly soon, remember that the Fed meeting minutes showed that rate hike is expected fairly soon. So he said it is relatively soon, okay? Well, basically saying the same thing with another word. Williams of the San Francisco Fed, not as senior as Dudley is, but he was very hawkish. He said there's no need to wait, and that interest rates are abnormally low, okay? Abnormally low. It doesn't get more bullish than that, okay? Before we look at the charts, we'll see how the dollar is stronger. Let's talk a bit about other things going on in markets, but clearly, I put this here in bold, the Fed goes hawkish, March firmly on the table, Goldman Sachs sees it at 60%. Here are the chances. Well, this is a more conservative view, but it moved up from 30 to 35% chance for a March rate hike. Again, according to Bloomberg, it's well above 50%. So anyway, it becomes more real. We have Yellen speaking on Friday. This came after a long period that currencies were looking for a new direction. Let's see if this dollar strength sustains. Again, it's Dudley versus Donald, or Fed hawkishness versus lack of detail from Donald Trump's speech. And circling back to the speech, we already heard the details, the general ideas before you actually spoke to Congress, and his speech was strong on nationalism, America first, but very light on detail. It seemed that he was still on the campaign trail. Okay, so the Fed dominated because we haven't heard too much news from Trump. In other news, the Scottish referendum talk, Nicola Sturgeon and her colleagues in Scotland talk again about an independence referendum for Scotland because Britain is going for a hard Brexit, and this weighs on the pound. The weakness in the pound began already earlier this week, and it's not related to Dudley. Okay. Yeah, so that's another feature. Now let's talk a bit about the data. In the data, we had a revision of GDP yesterday. It was actually quite disappointing in the United States. It remained unchanged at 1.9%. Remember, it's annualized. This is weak growth. Durable goods orders, a beat on the headline but missed on the core. Lots of revisions. This was expected to boost the GDP figure for Q4 because it was a revision for December and weigh on January. Anyway, it didn't provide the goods, not in terms of GDP. US jobless claims are steady at 244. That's a steady, stable piece of good news that comes out every week. Other figures such as new home sales are steady. Pending home sales, they were a bit weaker. Consumer confidence yesterday was very strong. But again, the Fed stole the show, not only from indicators, but also from Trump. Okay, so this is what we had in terms of data in the United States. In terms of data from other places, Australian GDP released tonight, early this morning. It came out stronger than expected at 1.1%. Good news for Australia. That's why the Australian dollar is holding higher than other currencies. In Chinese case, Xin PMI was also positive, beating expectations with 51.6 points. Okay. Other figures worth mentioning, again, the Brexit, what Brexit question can be asked. UK GDP was upgraded from 0.6 to 0.7. Again, with worries about actual Brexit, with what's in the future, not in the past. This weighs on the British pound. Elsewhere in Europe, more good news than bad news. The IFO survey in Germany bounced back after dipping last time, 111 points. Spanish and French CPIs missed a bit, but all in all, they were positive. In Canada, things were a bit mixed. And earlier in Australia, capital expenditure missed expectations, but GDP now trumps all. Okay, enough talk about news. Let's show you the strength of the dollar. So this is our technical segment, looking at the charts, starting with major currency pairs for March 1st. So we'll begin with euro dollar. Here we're seeing the strength of the US dollar. We're down some 40 pips on the day, extending the losses currently at 105.34. Support awaits at 105.20. Okay, further support at the historic line, or veteran line, I should say, of 104.60. Let's zoom out a bit more. See that euro dollar is still in range, 105.20 or 105 if you wish, 104.60, and well below 103.04. Looking up, we have 106.30, which was just a recent high this week and late last week. Above that, we have another stepstone on the way up. It's 106.80, followed very closely by a veteran line, 107.10, and then we have this high seen in January. It's 107.60 before this range here between 108.30 and 108.70. I'll put it at 108.50, which is strong resistance. So euro dollar is currently at sort of the lower end of the range, still not falling out of bed. Okay, pound dollar. Pound dollar volatility is much higher in pound dollar. Hopefully, volatility will return also to euro dollar. Currently, a pound dollar at 123.64, just above support there at 123.50. 123.50 was a pivotal line late last year. The next line and also a swing low back in January. Another line to watch here is 122.50, which provided support in January. Further below 121.20 and the very round number of 120. Of course, we touched below this line early in the year, in 1985, basically the year when the pair traded at such lows. So here we are at support 123.50, resistance 124.15, further resistance 125.40, 126.75, and 127.30. Dollar yen volatility is even higher than the previous two pairs, currently rising higher about 80 pips on the day. So volatility is certainly nice here. 113.50, resistance at the round number of 114, followed by 115.40, which was a high in January, and this is followed by an older line of 116, even higher, 117.50, and the ultimate cycle high is 118.67. Looking to the downside, we have the round number of 113, which is getting a bit weaker. 112.50 to 112 was the range that we've seen earlier in the week. It's closely followed by 111.60. That's dollar yen. Let's move to dollar CAD. Moving with oil prices, moving with Canadian figures. We had a special segment in the previous show focusing on this currency pair. So currently we're at the highs of 133.20. US dollar strength is reflected also here, but also Canadian dollar weakness. Resistance 133.80. Further resistance at 134.60, quite an old line, closely followed by the round number of 135 and 136. Looking down, well, this line is weakening, the round number of 133. More importantly, we have 131.80 and even lower 130.80. Okay, so these are the levels we're looking at, and of course, the very round number of 130 looms just below, and below that we have 129.70, which was a swing low, but I would still refer to 130 as the ultimate low here. Just a second. Sorry for this short delay. Let's move on to dollar, to the Aussie dollar. As aforementioned, we had some good news from Australia. That's why the Aussie is keeping its head relatively high. So currently it's 76.60, very much entrenched in the recent ranges, where 76.50 is some kind of a pivotal line within the range, and below that we have 76.10 and 75.10. But basically it's 76.10 to 77. We did rise above 77, and the next high is 77.40. Even further above, we have 78.40. Aussie dollar used to be one of the more volatile currency pairs, basically during 2015, but until 2015. But afterwards, we're seeing it quite stuck. Kiwi dollar got a blow from the RBNZ. Well, now it got a blow from Dudley. Anyway, currently very, very nicely reaching support here at the round number of 71. Further support 70.40. I did not mark the round number, the very round number of 70 as support because it didn't work. As such, further support awaits at 69.50 and 68.80. On the top side, we have 71.35, 72.50, 73.10, and 73.75. To complete our overview of major pairs, let's look at dollar Swiss, not my favorite currency pair due to SNB intervention. Currently almost at 101, resistance at 101.40, and only much higher resistance there at 103.30, which is a double top. Looking down, we have the round number of parity, of course, which is also support here, not only a round number. 99.60 follows very closely, and it's followed by 98.90 and 98.50. Okay, so that completes our overview of major currency pairs, the technical lines to watch for the month of March. And now let's move to crosses. So this is a technical overview of crosses for, well, beginning with the month of March. And before we do that, we'll say hello to Ramon and to Ed. Good to see you here. Good morning, everybody. Your questions, as always, are more than welcome. So technical segment for crosses for the month of March. March begins right now. Let's begin with Euro Swiss, warm up with this currency pair, which does not move a lot, and then talk about more interesting ones. So 106.45 is the current level. The range is very narrow here, 106.25 to 106.80. Further resistance to 107. 107.60 used to be a strong line of support when the pair was trading on higher ground, and above that 108.50 and 110. But the range here is very limited due to S&B intervention. Euro pound, the Brexit pair currently at 85.20, resistance 85.73, 86.35, 87.80, and well, far above here we have 88.50. Looking down, it gets quite busy. 85, 84.60, 84, which is already a very strong number, not only a round number, but also a swing low in February, and further below 83.30. Euro yen just under 120 at the moment. 120 serves as resistance. Currently we are at 119.60. So further above we have 120.50, 121.30 resistance in January, and also support beforehand. 122.40, 123.30, which was a swing high in January, and 123.80. Looking down, 118.50 and 118.15. And one of the most popular currency pairs for traders, definitely the most popular cross, pound yen, currently at 140.40, just above, well, the round number of 140, which actually is not such a strong technical line. Further support is at 138.60, and it's followed much lower at 136.40. So we have pound yen relatively stable in recent days, but this never lasts too long. This is one of the more volatile crosses, one of the more volatile currency pairs. Higher above 142.12, 144.80, followed closely by 145.40, and even higher 146.80 is worth mentioning before 148.50, which is much higher than we are at the moment. Okay, so to complete this segment, we'll also look, as usual, at the price of WTI crude oil. It's not a cross, but it's an interesting asset that many of you trade, and has an impact, of course, on the US dollar and, of course, on the Canadian dollar. 53.80 is the current level. We've seen attempts to move higher. We moved above this initial post-OPEC high of 54.50, but we didn't reach the next peak of 55.20. So after this rejection, we're back down to 53.80, support at 52, further support at 49.50. Once again, the round number does not serve as support. Okay, even lower, we have 46.50 and 44.50. Okay, so this concludes our technical segment for crosses. Now, let's move to the upcoming events. Again, everything is overshadowed by the hawkishness of the Fed. And the next big thing related to this is Yellen's speech on Friday. But before that, quite a busy day today, the first day of the month, after we had some figures from China. For example, the manufacturing PMIs, it's manufacturing PMI day, the first day of the month elsewhere as well. Before that, just after the show, we have German unemployment at 8:55 GMT. And then we have UK manufacturing PMI day at 9:30. It's the first out of 3 PMIs. The most important one is services on Friday. More for the Eurozone, German inflation is published during the day from the various German states, but the big figure comes out at 1 GMT. Then we have also US inflation, okay? Not the official CPI, but the Fed's favorite inflation figure has a big impact on the rate decision. It's called the core PCE price index, a mouthful. Together with that, we have also spending report, personal spending, personal income. Another top-tier figure comes out at 3 GMT. That's the manufacturing PMI. Okay, the ISM manufacturing PMI. Manufacturing is a small sector, but it has a lot of importance, also due to Trump's focus on manufacturing jobs. It's the first hint for the non-farm payrolls. And this month, non-farm payrolls are released only next week, okay? So we have the longest possible buildup. At 3 GMT today, we also have the Bank of Canada's rate decision. No changes expected from the guys at Ottawa, Stephen Pelosi and his colleagues. It's probably keeping the ship steady at 0.5% interest rate over there in Canada. Again, we talked last time, you can watch that segment, but the Canadian dollar is looking for a new direction. If the Bank of Canada will do something, I believe they'll cut interest rates, but they prefer, like most central banks, not doing anything. If you're trading the Canadian dollar, watch out also for crude oil inventories, as always, every Wednesday. So that's a strong start to the month, but tomorrow is also quite busy. The UK construction PMI is second out of 3. For the euro, we'll talk about the euro more later on in detail, but inflation figures are, of course, critical for the ECB's rate decision. Will it be lower this time? A lot depends on what we have from Germany later on, but at least the initial figures from Italy, Spain, and France from France and Spain were a bit disappointing. From Italy, they actually surprised to the upside. Last time we just had a big jump. A lot depends on the figure coming out today from Germany. If you're trading the loonie, the party continues with Canadian GDP tomorrow at 1:30, and as usual, jobless claims from the United States of America. And Friday, we do have hints for the non-farm payrolls, but no non-farm payrolls. The UK services PMI, then the ISM non-manufacturing PMI, and a speech by Fed Chair Janet Yellen. Okay, so if Bill Dudley is number 3, Stanley Fischer is number 2, Williams, a very hawkish member, is not in the top 3, Yellen is, of course, number 1. So traders will stay on the edge at the very end of the trading week. It will not be a boring end to the week. Okay, so this concludes our upcoming events for, well, the first days of March. Okay, and let's continue with our currency of the week, and that's euro-dollar. Euro-dollar, the world's most popular currency pair, okay? Many traders like it even when it doesn't move at all. I'm frustrated by the lack of movement, but, well, that's life. So let's talk about it, and maybe it'll begin moving. So, as I mentioned, not going anywhere fast, moving a lot on politics, clings to ranges. Currently, it's at the low end of the range. Who knows, maybe this time it will fall over. Okay, let's talk about all the moving parts and give you updates on the moving parts of the euro-dollar. So, as I said, politics have the biggest impact. Let's begin with politics in Europe. French elections, first presidential round on April 23rd, second round, critical one, on May 7th. We're only at the beginning of March, but every opinion poll matters. We have some opinion polls released on a daily basis, first round and second round figures, lots of confusing data, but picture remains clear. Marine Le Pen, the extreme right candidate, leads the first round. She has something like 25, 26%. Macron, formerly of Emmanuel Macron, sorry, formerly of the Socialist Party, running independently as a centrist, and the market favorite, is expected to win the second round. He's currently in second place with something like 24% ahead of Francois Fillon, the center-right candidate, with 21. So if it's Marine Le Pen against Emmanuel Macron, he is expected to beat her by around 60% to 40%. Quite a wide margin, wider than Brexit polls, wider than the US election polls. Okay, but of course it's earlier. He has higher chances now, Emmanuel Macron, after another centrist, independent centrist, Bayrou, maybe I'm butchering his name, sorry for that, he quit the race. Fillon is still in the race. He had some personal scandals, Penelope Gate, we won't get into that. He likes Macron and he has lower chances of beating Le Pen. So markets favor Macron and he has better chances. Now everything changes on a daily basis. And I'm telling you all this because it does move the euro. Okay, widening out, as I said, daily French opinion polls move the euro. But before that, we have Dutch elections on the same day of the Fed decision. Now, in the Netherlands, the extreme right candidate Geert Wilders of the Freedom Party is expected to come out as the biggest party. That could give a boost to Marine Le Pen. They're, of course, friends. They had this extreme right-wing conference a few weeks ago. He's not expected to form a government. There will be probably some kind of a mainstream grand coalition, but it has an impact on the French elections. Netherlands is a relatively small country, and France is, of course, the core of the core, second only to Germany. In Germany, we have elections only in September, but news from there also moves the euro. Of course, it's the biggest party. There's a close race between the mainstream parties. So finally, Angela Merkel has a rival. The socialist candidate Martin Schulz, formerly Speaker of the European Parliament, is neck to neck with Merkel. But markets are not that worried because both are mainstream centrist candidates, okay? And the extreme right in Germany, led by Frauke Petry, the Alternative für Deutschland, is actually weakening on some internal fighting there and other reasons. It's a bit on the back burner, but we should watch out for that. Italian politics, other things on the back burner. It gets ugly. Internal fighting also there in the Democratic Party, in the center left, but it's still on the back burner. And Greece, the never-ending saga, the never-ending story, is something we should also watch out for. Again, French elections come first, and the rest come afterwards, but these are all factors that move the euro. Lots of political stuff. Comment here by Ed: wouldn't follow the polls as they're always wrong, as recent history proves. Le Pen should get in just like Brexit and Trump. I don't think so. I think that, well, when we talk about polls showing a 20% gap, it's quite a lot. Remember that with Brexit, it was very close, 3-4%, and some polls actually showed Brexit winning. So it wasn't even the polls that showed Remain winning, they were within the margin of error. So it wasn't such a shocker. Also with US elections, polls showed Hillary Clinton leading with 3.5% in the popular vote, and eventually she won by 2%. Again, the system is different. It's the Electoral College, but it's within the margin of error. Of course, the outcome is different. Hillary Clinton is not president. Donald Trump is the president. But the polls are not that wrong. And if they, in France, they have a good reputation, and when it's a 20% gap, assuming it persists until May, it's a very, very low risk. Let's put it this way. Nothing is certain, but if we have the same polls a week before the elections, I think it looks much safer. Of course, lots of things can happen between now and then. So the polls now, of course, do not mean, well, not reflect what will happen in 2 months' time. Okay, so I hope to respond to your comment. Another comment here by Jax. Jax, how are you doing? Politics are a mess in any country, it seems. Yeah, I agree. Ed says, funny how Grillo reversed his anti-Euro stance, guess, to stay in place. Yeah, well, I don't follow Italian politics that closely, but I think that after Brexit, in many European countries, the pro-European sentiment strengthened once again, at least here in Spain. We had elections here 3 days after Brexit, and mainstream center-right PP party gained more votes, and in general, Spaniards do feel very European. So maybe the same thing happens also in Italy. Okay. Let's continue with the talk about the euro. We talked about politics, how French polls have an impact. Now let's talk about next week's big event, the European Central Bank. And it already has an impact on markets now because the ECB looks at inflation figures. Now, Draghi, the president of the ECB, filmed here in the famous confetti incident, he sees inflation as transitory, and he has good reasons for that. Oil prices giveth, oil prices taketh away. Okay, because now we're seeing how year over year, last year, oil prices were very low. Now they're back to, I wouldn't say high, but normal levels. And we're seeing a big year over year jump in inflation. This is the base effect. Okay. He also sees it as transitory. And as long as core inflation remains low, he has very good points over there. He also wants to consolidate the achievements by keeping the euro lower. Inflation can continue rising and exports continue receiving a boost, okay? However, he's not alone on the governing council. The European Central Bank is based in Frankfurt. The German members demand to taper QE to withdraw some of the stimulus to begin changing policy. Now, the situation has improved, and this also justifies moving a bit back, but he would like to push as far as possible. Inflation figures released, this week already from a few countries, today from Germany, tomorrow for the Eurozone, are very, very important for the March 9th meeting. Watch the core data. If core inflation rises, the euro could rise faster, and new forecasts next week are the key as well. ECB has 8 meetings every year, but 4 of them include new forecasts. So 4 meetings are more important than the other 4. Next week's meeting is one of the more important ones, okay? So that's the ECB. Moving to the United States, talking about euro dollar, so moving to the dollar side, there's now a higher chance of raising rates on March 15th. Janet Yellen is wearing some hawkish feathers for a change. We'll hear more from her on Friday. The key for me for the Fed decision is the wages. Non-farm payrolls will be released next Friday, 5 days before the Fed decision. If wages were very strong in December, we had a report about 2.9% gain year over year. But then we had another report on February. First of all, the revision pushed down the December figure to 2.7, and in January it was only 2.5. Why am I talking so much about wages? Of course, when the economy reaches full employment, then we have less job gains because there are less people to find for every job, and the competition for every employer pushes salaries higher, okay? And that's what the Fed wants to see. And when salaries move higher, also inflation moves higher. So the situation is improving, but very steadily, very gradually, in a very frustrating manner. As I wrote here, watch out for Fed speeches. Dudley was certainly a killer, not a dud. He was very hawkish, but Yellen, of course, is number one. Your recent data has been mixed, but I think we should listen, of course, to the NFP figures and to Janet Yellen, to Fed officials. Okay. And US politics, we just heard from Donald Trump. So he focuses on nationalism, and I think there is a growing disillusion regarding markets in terms of how markets perceive him, and this weighs on the dollar. Again, the dollar is pushed higher now by the Fed, not by Donald Trump. So, in short, Trump prioritizes changing healthcare, Obamacare first, taxes later. He said that more or less in these words. At first, he has to know about the costs of healthcare, then deal with taxes. Markets want tax cuts, and they don't really care about what health insurance Americans have. Second thing is defense spending, okay? So huge priority for Trump, not for markets, and this and if you cut on defense spending, if you raise defense spending, you push infrastructure spending to a later date. And he said that that defense spending will mean cutting expenditure elsewhere. Now, we're talking about foreign aid, but also talking about perhaps infrastructure. So all in all, it's not what markets wanted to hear. It's not the euphoric reaction back in November when they thought he would spend on infrastructure, cut taxes, push inflation higher, and begin a virtuous cycle in growth. So US growth is not expected to jump very fast, not on government action. And in addition, it will take time. So even though there's a unified Republican government, things are moving quite slowly over there. Okay, so these are the moving parts of euro dollar. Again, it's French elections, well, European politics, the ECB, which would like probably to push the euro lower, the Fed, which is pushing the dollar higher, and Trump, which is pushing the dollar lower. So many moving parts. Let's talk about what's next. I still see upside potential for euro dollar. That means stronger euro, weaker dollar on the disappointment from Donald Trump, and that the Fed will eventually hesitate to raise rates, depending on wages, of course, but the recent comments from Dudley make me rethink as well. There's limited downside potential from the European Central Bank. If inflation rises, Draghi will have to acknowledge reality. A bigger surge in euro-dollar could be seen in early May, assuming that Le Pen does not become President Le Pen. And but again, lots of moving parts here, lots of risks, political and from central banks. March is definitely a critical month, even though first 100 days end in April for Trump and French politics the presidential elections come in May. I think March with the ECB and the Fed decision are also very, very important. Monetary policy takes the reins once again. So to conclude this segment about euro-dollar, let's look at the euro-dollar chart. Mention again the big levels. Currently, we're hovering above support here at 105 round number. 105.20 was also a level we've seen in the past. Below that, 104.60 and 103.40, the 14-year low for euro-dollar. Looking up, quite a few short-term lines here. 105.90, 106.30, 106.80, 107.10. Stronger lines, 107.60 and 108.50. And even higher, of course, the round number of 110. Okay. So that's the euro-dollar segment. See here some comments from Ed. Trump was more polished since his inauguration. Guess he had some lessons. Good speech. Yeah, he has the unions on his side. That's a huge plus. The unions, well, unions want better working conditions for American workers and more American jobs. I'm not sure that's what Republicans want. Yes, many former Democrats voted for Trump on his rhetoric about manufacturing jobs, how immigrants are stealing their jobs. I'm not sure that's such a big demographic. Yes, his speech was more polished. It was a speech, more important ceremony, better than his inauguration, and certainly much better than his recent Bizarro World press conference and the CPAC speech. So in many cases, we have this kind of Trump light, like this recent speech a few hours ago, and then a few days later, you have the Dark Donald speech with the huge amount of lies. And anyway, this was a better performance, certainly, but for markets, again, he was light on detail, still seemed like a polished campaign speech and not a detailed one. Sure, he has a new Secretary of Treasury, Steve Mnuchin, in charge, so maybe we'll get more details in the upcoming days. More details about tax, more details about infrastructure. That would be good for the dollar, good for stocks as well. Sorry. Okay, let's continue to the next segment, which is a preview for next week's events. Two big events next week, NFP and the ECB, but we have as usual, slower start on Monday. Australian retail sales, the week beginning on Monday, March 6th. Then we have Australian rate decision, so a strong start for the Aussie. No changes expected from the RBA. We had some weak figures like CAPEX, but we had a strong GDP number. All in all, things look quite optimistic and balanced. No reason to raise rates, no reason to cut them anytime soon. On Tuesday, we also have the US and Canadian trade balance and the Kiwi milk auction, the GDT price index. On Wednesday, things become more interesting with the Chinese trade balance. Remember, the bottom line does not matter. What matters is top line, level of exports and level of imports. That reflects economic activity, not only for China, but for all the world. China is the world's #2 economy. We have the UK budget coming out on Wednesday. I really don't know what to expect, but well, we'll learn soon enough. Politics, once again, is more important also in the UK. The type of Brexit negotiations are more important. US ADP non-farm payrolls, big hint towards the NFP on Friday. After we already had the time, we'll have the time to digest the ISM figures. We've seen that in recent months, ADP has been better, and there has been a better correlation between the private sector figures from ADP and the actual official government non-farm payrolls. On Thursday, big event, the ECB, we talked about that. Draghi will probably want to depress the euro, but we'll have to acknowledge the rising levels of inflation, higher growth, and dropping unemployment. So it'll be a fine balancing act. Master Draghi knows how to drag down the euro, but usually he's successful, but sometimes he had his share of failures. So let's see, it'll certainly be an interesting event. Join live coverage. Also, Chinese inflation should be watched out for, and US jobless claims as usual. And Friday, March 10th, probably the latest NFP that I've seen in quite some time, maybe because February was short. In any case, we have a warm-up with UK manufacturing output, and we also have the Canadian jobs report, but US non-farm payrolls matter most, and I can say with a high level of confidence that wages are much more important than the headline gain in jobs. If we have wage rises closer to 3%, we can say, okay, we're going to have a rate hike in March. We're going to have 3 hikes in 2016, even 4. And if we're not going to have, if we're going to have 2.5% or lower, then there will be doubts and the dollar could fall. We'll be here next week to preview that in much more detail. We'll also have other figures by then. Anyway, 2 big events, $4 our special segment today. So we have the ECB on Thursday and the NFP on Friday. The rest of the week will be high tension in euro-dollar towards this event. So that's a preview for the events of March 6th to March 10th. Some comments here from Jax about Trump. He is learning on the job. Yeah, steep learning curve. Certainly, Ed says Trump said USD was expensive. Yeah, he talked about other countries doing a competitive devaluation, singling out Japan, which was surprising. I mean, China is, of course, the punching bag of many American politicians, and also Trump's saying China, but also Japan joined the ranks of the devaluation. His economic advisor Navarro talked about Germany doing that as well. We didn't hear that kind of rhetoric in his recent speeches, and we didn't hear anything like that from Mnuchin, his new Treasury Secretary. So things are calmer in that front. For the Fed, a stronger dollar means lower inflation and means less urge to raise rates. Okay, hope that answers your comment. Yeah, so I guess it's time to wrap up the show. This is a wrap up for the live market open for March 1st. We have had interesting developments in markets. The Federal Reserve steals the torch from Trump's speech in terms of market movements. The Fed goes hawkish. March firmly on the table, now higher than 60%, or 50% according to some analysts, according to some reflections of bond markets. Numbers are not that clear, but the chances are clearly higher, and this is what pushes the dollar higher. This overshadows Trump's speech. Trump's speech was more polished, as we've discussed here, but also very nationalistic and very light on detail. Okay, maybe we'll hear more details in the upcoming days, but the priorities are healthcare and defense, not infrastructure and taxes, not what markets want to hear. And elsewhere, the euro is sensitive to inflation figures and, of course, European politics. And in the UK, the Scottish referendum talk, once again, the second Indie vote weighs on the British pound as the government nears the triggering of Article 50, the official Brexit. To focus a bit more on the big theme of the market, Dudley, number 3 at the Fed, and well, usual Dove, Dudley the Dove, said there is a compelling case for raising rates, and fairly soon is relatively soon. Williams, which was a long time ago seen as a Dove, said there's no need to wait and that rates are abnormally low. Strong rhetoric from Williams as well. GDP was left unchanged. That was a disappointment. Other figures were quite mixed. Strong consumer confidence, not so impressive durable goods orders. Elsewhere, the Australian dollar stands out thanks to strong GDP and an upbeat Caixin manufacturing PMI. UK GDP was revised higher, but politics have the upper hand. And let's look at the charts quickly during this wrap-up. Euro dollar on lower ground, 105.40, support there just above 105. Resistance at 106.30. Pound dollar fell below 124. Currently 123.68. Above support there at 123.50. Resistance 124.15. Dollar yen, higher volatility here. 80 pips higher on the day, 113.55. The current range is 113 to 114. Wide range reaches 115.40, and to the downside 111.60. Dollar CAD moving higher. The wider range here is 130.80 to 133.80. Currently at 133.26, at the higher end of recent ranges. Aussie dollar stands out, not falling against the dollar. Well, even higher, 6 pips on the day, basically unchanged. The range here remains unchanged, 76.10 to 77. Wider levels to watch are 77.40 and 75.10. Kiwi dollar ended its recovery because of Dudley, 71.30, supported 71, resistance 72.50. Okay, so that's it for the day. Watch out. See how the Fed continues with its torch. Jax asks pairs to watch today. Well, I would say the euro dollar because of the inflation figures coming out from the eurozone, from Germany today and tomorrow for the whole eurozone. It has an impact on the ECB's decision. Watch out for any commentary regarding the Fed decision, the upcoming decision. So it impacts more dollar yen, so the bigger or more reactions to Trump, and the biggest mover is dollar yen, more than euro dollar. So these are the basically the pairs. And another pair to watch, less popular currency pair, but it's of course the Canadian dollar because we have the Bank of Canada decision, but I doubt we'll have something really substantial. So again, I think euro dollar has become more interesting. We had a special segment on that. Inflation figures now are critical for the European Central Bank's decision. Okay, I hope this answers your question. Question here from Ed: will you be doing the daily show again? No, at the moment the plan is to continue doing the show every Wednesday morning. I was on vacation last week, so we didn't have the show. But of course, we could change this in the future. But basically, it's every Wednesday, and I also participate in FX Street's live coverages. Stay tuned for that as well. Yeah. Okay, so that's it for today. Thank you very much, everybody, for coming. Thank you for the great comments. I really like it, the comments, the questions. And I wish everybody a safe and successful day in markets. I hope this volatility continues. We had last week was such a boring week. Okay, I was out. Anyway, thank you for coming. And yeah, I guess see you next week. So thank you for the kind words. Missed the daily show. Yeah, but at the moment every Wednesday. Maybe we'll get back to daily shows in the future. Anyway, thank you very much for the kind words. Thank you for coming. Wish everybody success, and see you next week. Thank you, and bye-bye.